suspenseful. Okay, so it's working. I'll make some forward-looking. I'll make some forward-looking statements today. So, David just got off the stage. I followed him in Zurich as well, and I like to follow David because the last point he makes is all about corporate governance, or the second last point anyways. And it's important when we talk about and when we assess investments to think about whether or not management is aligned with shareholders. We've got about 83 million shares outstanding at Aurion, about $18 million in the bank, and management is the largest ownership block. I personally own about 9.5% of the stock. I joined the board because the company was run by a geologist. It had some success and no experienced executives to deal with it, so I serve as a volunteer, taking no compensation, no stock options, nothing other shareholders don't get, in order to ensure that shareholders will distinguish us as a company that is run to make the stock go up. I add to that within the boundaries of ethics. No paid letter writers, no email blasts, nothing like that. But who cares? We're well governed. That's great. I'll also point out our biggest shareholder, just slightly bigger than me, is Kinross. Next to them, next to me, Eric Sprott, Ross Beatty, both owning 5%, and Goldcorp having bought 5% of the company in the market, but then getting a little busy, being taken over, is probably our next largest shareholder. Again, all that stuff is interesting, but that's the financial engineering. What's the value proposition here? We're a pure discovery company, and we are at least thought by Cormark to be in the early part of discovery, where you're right in front of the parabolic move. May they be right, but you can see that discovery exploration companies can yield stunning returns. Aurion to $40, Great Bear from 50 cents to $9 this year. Diamet way back in the 1990s on the slave Creighton going to $70 a share at one point, and all with satisfying conclusions for investors. Our goal as well. Now, the opportunity, of course, is generated by all the things that David talked about. Cycle after cycle, large extractive companies and natural resources engage in gigantic acquisitions at the end of the cycle, take on a lot of debt, often to do so. Inevitably, commodity prices turn, and the first thing to go is exploration and investment in sustaining capital. So these charts have been seen before. I love this comment by Ian Telfer that all the great gold deposits have already been discovered. That's why we're in the business that we're in. It's incredible. We go from dynamic environments with lots of trading and predators stalking prey to a turgid swamp with pythons digesting many pigs, and then the cycle begins anew. So, not to worry, the prospectors continue to be at work down here in the junior markets, and really this is how discoveries are made. That's one of our prospectors. They're all bald, actually, which is quite interesting, and they're all brothers too. So we're in Finland, and we staked about 80 kilometers of a 125-kilometer long fault line, where the state mining company found gold about 40 times and put it in a box and archived it. Udo Campo had no interest in gold in Finland, and so this belt has been virtually unexplored. This looks just like the Destor-Porcupine Fault, or just like the Cadillac-Larder Lake Break, and those fault lines are the prominent feature of two of Canada's greatest gold camps, Timmins, 70 million ounces, and Kirkland Lake, 40 million ounces. What does it look like? Well, in 2016, we started finding these massive quartz boulders on surface. You can see them here, and you can see them on the cover of the presentation. I like that shot a little bit better. They're a little more revealed there. So, to date, we've found about 1,200 of these things at our initial discovery, Omarusco, and they average 25 grams per ton. That's over 1.5 kilometers by a kilometer. I've been investing in mining companies for probably 20 years now. Maybe owned 400, maybe looked at 1,000, and I've never seen a surface expression like this in my career. The footprint of mineralization is over 15 kilometers, and it would comfortably fit Kirkland Lake or Timmins into it. But again, who cares? It's all on surface, but you've got to find it in the ground. It took a little while. We drilled into the boulders. It wasn't there. We figured out that probably they were a remnant of mass wasting in scarp retreat. So this rugged hill that you see in this slide was probably twice as tall and twice as fat, and it's just worn down over the years. And those big boulders were over your head millions of years ago, not under the ground and frost heaved up. So we hit it finally last year. The first true discovery hole was 3 meters of 800 grams, followed up by 4 meters of 40, about 5 meters of 24, and 12.5 meters of, 12.5 grams over 5 meters. And then to start the season, we moved our drills over to the other side of the boulder field, which you see on the left side of the slide. And our first two holes this year were 31 meters of 3.5 grams and 28 meters of 9.5 grams, with gold in the quartz, gold in the sediments. And in fact, we've encountered gold in almost every kind of rock that we have here. We've got gabbros, sediments, volcanics, and of course lots and lots of high-grade quartz veins. You can see that beautiful wire gold wrapped around part of the discovery hole, and you don't see that even in many of the great gold camps on Earth. So, why is this here? I mean, big giant fragments of quartz lying around like that anywhere, even in darkest Africa, soon attract thousands of artisanal miners. But this is up at the Arctic Circle. Finland only has 5 million people living in it. Most of them live down in the south, close to Helsinki. And mining was in the hands of the state in Finland until 1995. Udo Campo, the state mining company, was only interested in GDP-related minerals, copper, nickel, iron ore. They're a publicly traded steel company today. And so they would find gold, as we mentioned earlier, and archive it, put it in the public databases, free for everyone to see, but never followed up. So they joined the European Union in 1995, and by stipulation of the treaty, had to begin making Finland more hospitable to foreign investment. Of course, BRIEX happened 2 years later, and there was very little capital available for the juniors who do most of the exploration work in this business. And in the tiny window between 2002 and the financial crisis, a high-grade vein discovered by a road construction crew went to Riddarhyttan, a little Swedish company. They drilled it out to 2 million ounces, and it is now Europe's largest gold mine, being operated by Agnico Eagle. You can see it in the bottom histogram there, and the central Lapland greenstone belt is the gold one. No coincidence. And if this was any other greenstone belt, the Abitibi or the Norseman, for instance, what you'd see is this sort of smooth, log-normal distribution of gold deposits where you have a couple of really big ones, 5 or 6 pretty big ones, 7 or 8 big ones, and then the frequency will increase as the ounces go down. So why is there just one 8 million ounce gold deposit in Lapland and just a few small ones? Well, it's not true. I think we've demonstrated already that there's going to be a lot more gold found there, and we're only in the incipient stages of it. So there's another interesting reason. The Canadian markets, the Australian markets are very efficient. They don't give capital to capital-intensive exploration programs. And if you were at this latitude in Canada, you can see in the lower picture there, that's Committee Bay. It's just pure tundra. There's no trees. It's a 4-month exploration season. You need a fly-in, fly-out camp. You've got to position diesel fuel. And just to get people there and keep them alive costs about $6 million a year. And then additional expenses, millions of dollars often in aviation expenses. So we are, thanks to the Gulf Stream, in a much better place. Same latitude in Canada, but we fly commercial to Helsinki. We fly commercial to Kittilä. You drive on this paved road to within 8 kilometers of the discovery, and you drive on that logging road right to the discovery. The underlying landowner is Metsähallitus, the state forestry company. They've blitzed the property with logging roads, clear-cut it in many places, and scarified the ground, turning the soil up and effectively trenching for us, at least shallowly. It's really extraordinary. You might still wish that we were in the Abitibi or in Nevada. Those are extremely prospective places still. But what I would say is every square inch of Nevada has been staked probably for 100 years now. held by families, generation after generation, rented out to the junior sector, cycle after cycle, often returned with only rents paid and very little exploration done. So our property is 100% staked, and has a 0.15% royalty to Metsahaltis, the state forestry company, on it. Again, really without precedent to find all this gold on surface, to be able to stake 80 kilometers of a major fault line, to find physical gold, to find high-grade gold in quartz lying all over the surface, and to have it without a royalty in an area where exploration is extremely economical. Now, with a land package like this, you'd expect more discoveries, and indeed, down there in the bottom right hand of the screen with that gold star, we've got another one. Laoni is much easier to work than Amarusco, and most notably because the gold is an outcrop, not in boulders. You don't have to find the source, it's right there. That was the discovery outcrop. We've since taken 1,000 samples over 5 kilometers on Laoni, and they've averaged 8 grams. Again, without precedent in the last few decades of exploration, quite frankly. So, what's also important about investing in these highly dangerous companies is market timing. We went into a 5-year bear market in mining from 2010, really the end of 2010 to early 2016, and had a fantastic 100% move in the venture from January of 2016 to the middle of 2017, from 470, which was a 50-year low, to about 940. We've given it all back. We're almost right back at the lows. Capital is even harder to raise today than it was probably in 2015. Not a problem for us. We've raised $17 million this year at a blended cost of about $1.30. So raising capital at dollars, not pennies, which is essential for junior companies, and not giving warrants away. Inevitably, the cycle that we talked about at the beginning of the presentation begins again. These companies run their reserves down. They fire their exploration teams so that the C-suite can continue to work. They divest of assets to pay debt off, and eventually they have to rebuild. All of these great gold companies were built by buying small companies that made great discoveries, and we hope we'll be the next one. Thank you.